Let's talk about your overweight position on China. A lot of skeptics are still out there holding on to their bearish sentiment around China, and yet the policy support is there. Is that a good setup for your position?
Yeah, we had it as several building blocks. One, that the valuations are attractive. Secondly, I think there's been a lot of good business development in China. Companies are achieving tremendous things, and I think in all the negativity over the last few years, a lot of that is getting glossed over. And then additionally, because 2024 was such a weak year, things already look like they were getting better in 2025, and there are various stimulative measures to help make sure that they're on the stabilization track. That kind of all opened us up to being kind of more invested and overweight into China this year.
And is it just the equity side of things? From your multi-asset strategy point of view, what kind of Chinese assets would you be feeling most bullish about?
Yeah, so we are focusing on the equities as having the most upside, but we're pretty open to the fixed income solutions as well. I think our bias has been a little bit more towards both sort of U.S. dollar and local currency assets as a basket of investments around the region, but we would be also open to renminbi bonds and so forth in China.
Wow, that's kind of surprising, even though yields are just so low there. But anyway, look, let's talk a little bit more about bonds where you're overweight versus, let's say, neutral on equities, right? You like your overweight there. And when I think of the bond picture there, these guys are opening up the taps, right? They're going to be issuing paper like crazy, which is potentially going to be great for yields.
Yeah, and the way I'd describe it is, the equity outlook, still has paths of having a good year, but it's a complicated year for equities. A lot of fixed income investments, we feel like we can get 4 or 5% yields this year. And when the equity uncertainty is so great, this sure seems like a year where investors should get a little bit more comfortable with taking yield. And I find as I talk to clients, after the history of the last decade of 0% interest rates and also the painfulness of 2022, they're sort of overly fearful of bonds, whereas actually at these levels, it's hard to make your bond returns negative. Even if, bond yields surprise to the upside, you maybe face a little bit of headwind, but it's not a 2022 scenario under any circumstance. So I think we've been trying to encourage our clients to at least be balanced into that.